Jim Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save a little money. My job is not just to entertain, but to try to explain what happened on a day like today. So call me, 1-800-743-CNBC. Tweet me at Jim Cramer. You know, you can learn a lot about a market from looking at the stocks that make it to the 52-week high list. It's a rarefied group by nature, and it speaks loudly about what works and, of course, what doesn't. So on a day when the Dow slipped 108 points, S&P declined 0.53%, and the Nasdaq lost 0.83%. Most of that decline occurring in the second half of a tumultuous session. I want to interpret what the market is saying for you. That way you can make your own judgments. Let's use yesterday's list. It's more informative and shows you some real themes that I think have staying power despite today's ugly action. First, it's probably not that surprising, but there's no real tech on the 52-week high list these days. President Trump had what he called a successful call with President Xi, and they talked about getting together. We heard that rare earth minerals were discussed, something China has a near monopoly on. I understand that we're now facing some auto factory closures because we don't have enough rare earth magnets here. They're made in China. We didn't build cars. We got a momentary bump up for tech, but it was ephemeral. Tech came apart as quickly as it came together because without a deal with China, the group could remain under pressure for some time, even as there are tons of individual stocks in the tech group that have nothing to do with China. It's important to realize, though, that tech's not well represented in the 52-week high list. In fact, there was only one big one. That's Broadcom, which reported a small top and bottom line beat after the close with solid guidance for the current quarter. But the stock is just getting hammered in after-hours trading. Now, I think the stock simply came in too high, given how much it's run for the April lows. I'm not buying the bear case, which is based on some narrower margins on custom-made chips that it does. It's just that tech stocks are under pressure, and Broadcom wouldn't be spared today, whether it reported or not, and people should recognize that instead of freaking out. It's up 12% for the year. We've also got a couple of smaller techs acting superbly. Incredibly, Seagate is on the list. For a long time, this was just another commodity tech play. But now it's an AI trade because data centers need lots of hard drives. What a comeback. Hey, glad they could hold on for all these years. Last week, we had Zscaler on the show. Now, this is a cybersecurity identity play. It just blew away the estimates. Now, look, I've gotten spoiled just owning Palo Alto Networks and CrowdStrike for the Travel Trust. But verifying a person's identity in order to stop imposters, that's a very good business. I wish I could own 3 of these for the trust, but owning 2 has already violated my rules for diversification. I'd have to apologize to club members. I'm not going there. Then if you want to stretch things, let's roll in Johnson Controls. Yeah, HVAC, all right? It creates big cooling systems, very much needed to keep data centers from overheating. Sometimes I think that they just got really lucky to have this business. Stock's been strong now for ages. It might be a collateral play on what had been the most potent stock in the market, CoreWeave, which closed yesterday as a 4-bagger from its recent IPO before pulling back hard today. It's kind of a bit of a meme stock. Yeah, you know what that is. Now, there was a time when these tech stocks couldn't be on the 52-week high list unless they were led by an Alphabet or an Apple or an Amazon. Instead, we'll have to settle for Microsoft, which hit the high list today and has been flying ever since that last quarter, which indeed was a great one. The dominant winner in this new high list is examination. Well, it's so easy. You probably even know it if you just watch a couple hours of our shows, and that's Netflix. Now, here's a stock that seems to permanently reside on the new high list. It's one of those positions that every time it moves up, some analyst raises numbers and raises price targets. Truly virtuous circle. Right now, Netflix is going up on its content slate, including the upcoming season of Stranger Things and Squid Game. It's also been going up because its ad tier is working well, and it should only get better as they develop more ways to help advertisers target the right viewers. At the end of the day, Wall Street loves the subscription business, and Netflix, it's the king of subscriptions. My confidence in the subscription model extends to Spotify. This incredible company dominates the podcast business and the music business and, of course, the new high list. It's roaring right now, but it does have periodic moments of underperformance, and that's when you got to snap it up. Bye. What else made the list yesterday? Cintas is not necessarily considered a subscription business. Hey, but their standard contract is 5 years for to bring your company uniforms, first aid products, along with fire protection and safety gear. Sure, the stock typically goes down if you think we're headed for a slowdown, but Cintas can't join the new high list without robust blue-collar hiring. The fact that it's up here is a terrific sign, actually, for the broader economy. Now, there are plenty of fintechs that have come public in the last 10 years. They always have their adherents who believe the whole group should be on the 52-week high list. It is so overloved that it makes me sick. I find these now repulsive. But if you want to know what a reliable fintech looks like, look no further than Visa, which I can't believe is on the high list, even though it had a terrific quarter, of course. You know what? I'm hoping that COF, Capital One, which just bought Discover Financial, that it could enter the 52-week hollow ground. It's cheap. It'll have a gigantic buyback come July. But Visa's the one that's made it. Right now, COF, I feel very lonely, but I won't come July. There's no real theme to the other stocks on the list. DoorDash, that's been a winner from the get-go, and we know from Campbell's Soup conference call and by Dollar General, too, that people like to eat at home these days. That could mean DoorDash, which is remarkably well-run and has a deservedly strong reputation, if indeed you don't want to cook at home. eBay's a real shocker. It's come a long way to get back on this list. Now, I've watched this stock get carved up for ages, but now it looks like eBay has stopped being a whipping boy, and people are feeling comfortable buying merchandise secondhand. As a partnership with Facebook's Marketplace, which has spurred real growth for the company. I like that, by the way, that Marketplace section. Then there are two one-offs, Roblox and Mosaic. The game of Roblox is something that fascinates kids. It may be too much for all I know. But the point is, it's insanely popular. It's done nothing but go up ever since it was attacked by a short seller. I got to tell you, I think that it's cleaned up its act. I think it's terrific. Here's a real tough one to understand, Mosaic. It's a fertilizer company. Now, this one's an oddity. It's entirely possible that people are playing a theme of China food shortages. And that's one, by the way, that I'm not seeing. I think what it really is farmers are flush, and that means they're capable of buying tons of fertilizer, which doesn't cost that much anyway. Finally, there's GE Aerospace. Now, this company has some of the greatest cash flow I've ever seen. It makes aircraft engines, and maintenance business is fantastic. Do you have maintenance business? That may be the single best annuity stream I have ever seen. It's one of my faves, but after this run, you can only buy it at a discount. Now, each day has its own mosaic. We have Axon tonight, the law enforcement technology company that has so much business. They can barely handle it. It's new high natural. By the way, they have great software business growing at more than 30%. There's Booking Holdings, the old Priceline, which might make you think twice before you write off the travel bull market. And why don't we just throw in another one that I really like, Intuit, the small business person's digital accountant, or so I like to think about the TurboTax division. 3 aces there. By the way, you can also learn a lot from the worst performers of the day. Today it was Brown-Forman, the parent of Jack Daniels, on a terrible quarter. More on that later. But the second worst, it's Tesla. You know, I don't even know what to say here. You get a stock down this much, not only do you have to have terrible numbers, which Tesla certainly does, you have to effectively go to war with the President of the United States. So many people own Tesla because Elon Musk was tight with Trump. Now that they're on bad terms, not such a good reason. Here's the bottom line. At the end of the day, this new high list is an eclectic group of stocks, mostly geared to U.S. venues. That makes sense given the trade war. I'd be a buyer of any of these names down 5 to 8% from these levels. That is my favorite percentage to start a position on a red-hot stock, and not before then. Like I said, the market's a terrific teacher, and it's teaching you that these stocks are right for the current environment.
House of pleasure.
Let's go to Richard in Florida. Richard!
Hey, Jim. How are you?
I am doing well. How about you, partner?
I am doing well here in sunny South Florida. Hey, listen, you recommended Dutch Brothers a few months back, and I made a lot of money from it. I doubled my investment, and I exited the position. I'm just calling to see if now is a good time to get back in.
Okay, Christine Barone was in town the other day. I said hello to her. The stock's up on a real spike. It was up really big yesterday. It's a very hot stock. I would suggest buying it down 5%, but boy, do I like it. How about we go to Ann in Indiana? Ann.
Jim, thanks.
Sure.
I'm a club member. Thank you.
Thank
Calling
you.
about service now.
Oh, yeah. Should I have bought it for the club? I got to tell you, Ann, over and over again, I thought about it because it's such a good company. I know its earnings are, it looks like it's expensive stock, but in the rule of 40, it's terrific. I got to hand it to Bill McDermott. I'm never going to say a bad word about ServiceNow. If you want to buy some, I am certainly going to greenlight that. By the way, can I just tell you, I look at what they're doing and I say to myself, wow, they've really figured out AI. Where did I get that from? Jensen Wong. All right, it's an eclectic list of stocks near 52-week highs, but I wouldn't go against any of them, given all the buyers out there. On My Money tonight, Axon, which I just mentioned, was on that 52-week high list. So what's driving the strength? I'm checking in with the company's top brass. And Boeing stock has taken flight over the last 2 months. So are clear skies ahead for the once ailing aerospace company? I'm going to give you my take. And what the heck did just happen with Cracker Barrel? I'm seeing if the decline is worth nibbling at, if not just taking the whole darn thing. Stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.